Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bearish scenario where we are looking for a deeper wave B or two before continuation to the upside. In this scenario, we want to see a wave B or two inside this target box. The common target for a wave B pulled from the low to the high of wave A is between the 0.382 41.8k and the 0.886 at 39.1k. The common target area for a wave 2 is between the 0.5 and the 786, 41.1k to 39.6k. We also preferably like to see the low of B or 2 made after the 0.382 fib time also taken from this low to the high of A or 1. At the moment you can see that we do have a low here and a bit of a move to the upside, but this low is made before the 0.382 fib time and also did not touch the 0.382 Fibonacci. If we then zoom in to a scenario that could lead to more downside for a wave B or 2, then we have a flat scenario here on the chart. Three-wave structure to the downside in a wave a zigzag. Then we're looking for another zigzag structure to the upside in a wave B, which is the most common pattern for a wave B in a flat structure. Most common target for wave B is between the 1.236 and the 1.38. taken from the high to the low of wave A, giving you an area between 44.3k and 44.6k. After a wave B, we're going to be looking for an impulsive structure to the downside in a wave C. Additionally, besides the target area of this wave B, we do have some more resistance here, sitting between 43.9k to 44.7k. If we then look closer inside this area over here, then this is what we were looking for inside wave B. So we are now zooming into wave B and we are looking for a three-wave structure to the upside in that wave B, right? So here we then have that zigzag to the upside where wave A is finished, looking for B, potentially finished, and then a move to the upside in wave C. Earlier today, when I made the update over here at 7 to 8 a.m. in the morning, probabilities were higher to move towards the downside. There were two reasons for this particular probability. First of all, price moved towards the upside on decreasing volume, increasing the probabilities that the move was ending, and we could expect a bit of a move towards the downside. But secondly, price did not hit the 0.382 while it was ranging over here, and when we are looking for corrective structures, we do like to see at least a 0.382 hit, which is usually a minimum target for a wave B, X, or a wave 2. We got the move to the downside, hit the 0.5, and we were live as well while price was testing the daily, which we hit over here. And after a wave B, we're looking for wave C to the upside. Now the common target for a wave B is between the 0.382 and the 886, but now of course the 0.5 has been hit, so the target is between 42.6k and 42k, where potentially B is in, and we could be looking for a 5-wave impulsive structure to the upside in a wave C. However, something else we do have to consider is that wave B is not yet finished, so we are then looking here for a continuation of the range before we get an impulsive move towards the upside. In this scenario, your A is finished. You look for a three-wave structure to the downside, either in a flat structure in a wave A, B, C, or a W, X, and eventually a wave Y before then continuation to the upside. You can also see I have an impulsive count over here in a wave 1, 2, and a wave 3, but more about that in a second. If we go to the 1-hour bullish scenario, then we are looking also for a finished impulsive structure in 1 or A, but this time a finished wave 2 or B, and we are going to be looking for continuation to the upside in a wave C or a wave 3. Now, as mentioned earlier, this low over here is made before the 0.382 and also did not touch the 0.382 Fibonacci, taken from the low to the high of A or 1, which does lower the probabilities for this particular scenario. However, if this is the low, then we are going to zoom into this structure here and we're going to try and count an impulse to the upside. So here we then have a finished wave 1 to the upside, looking for a wave 2. Common target area for a wave 2 is the 0.5 to the 786 area. 0.5 has been touched. Target area 42.6k to 42.1k, and then we want to see continuation towards the upside in this wave 3. Now, just like with the wave B, this wave 2 might already be finished, or potentially you are looking at an extension of this range A, B, C, or a WXY. Keeping in mind that the weekend is coming up and the weekend is known for its ranges, and this could fit with the weekend coming up. Now, if price is going to make any bigger moves, preferably it does so before the New York market closes at 10 p.m. Central European time. So the moment the Saturday hits, pretty much we can expect a bit of a ranging structure. If we then finally look at a scenario where price is not going to take this high, but instead we're looking for already a move to the downside and then a wave W, zigzag X finished and a Y to the downside, then this scenario does have lower probabilities for a few reasons. First of all, if we are looking for a double zigzag in a WXY, we have a zigzag in W, then a corrective structure in X, and you want a zigzag in Y for a deeper retracement to the downside, preferably the 0.7 Fibonacci is not hit, taken from the high to the low of wave W. But as you can see, the 0.7 is hit multiple times, lowering the probabilities for a double zigzag, which therefore, if we are looking for a wave Y, increases the probabilities. Wave Y is a flat structure, likely taking the high, or a triangle, but it is way too early to call a triangle at the moment. Another reason why this scenario has lower probabilities at the moment is because of the subdegree count of this wave X. Wave X has to be a 3-wave structure. Arguably, you're then going to have a scenario like this, where this is your 3-wave zigzaggy structure to the upside. Of course, I have a bit of a scam wick over here, but what is important is that this red candle wick did not hit the 0.618, taken from the low to the high to the low for then a potential ABC. Also, the 0.618 is a rare target for a wave C. Most common target is the 1 to the 1.236, which is again above the high. So therefore, the probabilities for this scenario, where this is pretty much the high, we're not going to take this high, instead we're going to first take the low, has lower probabilities. We also had bullish CVD divergences as price came down on top of the daily during the live stream. These have now played out as this high got taken over here, so that is very nice. And now that price is ranging here, we just have to wait and see what we're going to get. And if we then look at the probabilities of the different scenarios, then on the 1-hour chart on the micro here, we are looking for a deeper retracement to the downside in a wave B or a wave 2. At the moment, this would have the highest probabilities from an Elliott Wave scenario because this low over here did not touch the 382 Fibonacci and is also made before the 0.382 Fib time. More locally, currently, the highest probability scenario is a flat scenario where we take the high before we would potentially then later take the low. Wave X, as mentioned, hit the 0.7 Fibonacci taken from the high to the low, lowering the probabilities for a potential double zigzag to the downside. Also in Wave X, if we're looking for an ABC, Wave C didn't even hit the 0.618, which already is a rare target for a Wave C. So therefore, this scenario would have the highest probability in a Wave A, B, C. If price moves towards the upside, we do have to at least observe the reaction over here at resistance, because there is the potential for continuation to the upside, of course, in a bullish scenario where we are looking for continuation, but also we are going to enter the gap once again. This is a daily gap here on the daily chart. You can see candle 1, sharp move down, candle 2 creating a gap over here. We are now ranging against this gap. So if we again take the high, probabilities of course are there for price to fill the gap, move to the golden pocket over here where the gap high is sitting at 45.4k, and another resistance box that I have here is sitting at 45.9k to 46.7k. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.